फ्रेंड्स, इन्वेस्टर तब एंटर करता है किसी एसेट क्लास में जब वो ऑलरेडी बढ़ चुका होता है, and gold and silver are the prime examples. However, I keep on getting many times the same question कि is there any new trend that is coming up? क्या कोई ऐसी चीज है जहां हम अभी डाल दें और हमें पता है अगले 5-8 सालों में we will really make money on that, and I am very patient and a long term investor. Many a times what happens, there are various asset classes and every asset classes have certain cycles of investing and the returns they make in the market. However, there are times when there are strategic shift into the market. For example, there has been a change into the energy consumption in a way that इलेक्ट्रिक व्हीकल्स की तरफ जा रही है चीजें और न्यूक्लियर की ज्यादा तरफ जा रही है बिकॉज द एनर्जी डिमांड बिकॉज ऑफ आर्टिफिशियल इंटेलिजेंस एआई डेटा सर्वर्स इज गोइंग टू बी सो हाई दैट फॉसिल फ्यूल बेस्ड पावर सोर्स is not a long haul game. So therefore nuclear is the story. Point number 1. Point number 2, because everything is going EV way and data centers, so more and more of copper will be required. आज हम उस चीज पे बात करेंगे, strategic opportunities for the long term wealth creation. While the markets are chasing gold and silver, the real transformative opportunity for the next decade lies in the fundamental building blocks of the global electrification, that is nuclear and copper. So if you look at copper, it is called as an artery of electrification. Its demand has got 50% is expected to increase by 50% by 2040. Its supply, there's a structural deficit from 2026, which will reach as high as 30% gap by 2035. Now, this has been a part of the research report. Then there are new vectors like AI data centers, electrical vehicles. They require 4 times more copper. Now just think about it. If there is any commodity whose demand is going to increase by 4-fold, obviously the prices also follow it because the demand is increasing faster than the supplies. So then the second part we are looking at is around nuclear. It is called as an engine of future. Now we're looking at growth. India targeting around 100 gigawatt by 2047, which is around 12 times the increase from current capacity. So अगर आप 2047 2050 तक अगर आप कह रहे हैं कि भाई 12 टाइम्स बढ़ेगा, ठीक है, तो उस हिसाब से सोचिए कि आपका रिटर्न्स ऑन इन्वेस्टमेंट कितना बढ़ेगा. Again, catalyst. The Shanti bill has been unlocked and this whole sector is now open for private investments. It is a 15 lakh crore investment opportunity which is created by a policy shift. Now, what is a core rationale when we look at it? They both are actually interconnected. So it is not that कि भाई मैं copper ले लूँ या मैं nuclear ले लूँ. So whether you talk about copper or whether you talk about nuclear, they are actually interconnected. The AI revolution is driving copper demand and reliable baseload for power, which is nuclear. So they are actually reinforcing the cycle of growth. So our thesis are, there are two pillars which are supporting this single mega trend. First, when you look at is copper, arteries of new economy. Second is nuclear, which is the heart of nuclear power. So when you talk about nuclear, these are the infrastructure for the nuclear plants, and the nuclear provides the power for artificial intelligence and the electrical vehicles demand. So when you look at the copper is the physical medium. It is a physical medium of electrification. It is a connective tissue for the electrical vehicles. Now, renewable energy grids, AI data centers, they are all being used, or the energy is transmitted through copper wires. So without it, the energy transition will actually fail. So when we look at the nuclear energy provides the carbon-free, high density, reliable base load power, which is essential for digitized world. Now, only scalable solution to power, that is a massive energy needs of AI and advanced manufacturing, can be provided by the nuclear power for that matter. So now here we are looking at pillar number 1, which is called as the copper thesis. So it has been a very great statement by Mr. Carlos, and he has said that the copper is the connective artery which links physical machinery. So you are looking at physical machinery, digital intelligence, mobility, infrastructure, communication, and security system. Now, the future availability of copper has become a matter of strategic importance. So the copper market is entering a structural deficit. The market itself is entering a structural deficit, which is fundamentally different from the past cyclical shortages. The deficit is driven by irreversible shift in how we generate, transmit, and consume energy. Generate, transmit, and consume electricity. So there's a whole shift into the way we have been consuming it. What is the projected global copper supply versus demand in million tons? So we are in 2025 and 26, 28 metric tons. By 2030, it is around 33 metric tons. By 2035, it is projected that a critical 30% supply deficit is actually anticipated. So when we reach at 2040, we will be looking at a demand of around 42 metric tons, which is around 50% increase by 2040. That is from 28 metric tons to 42 metric tons. What is the gap? The potential 10 million ton shortfall by 2040, which is as per the S&P Global for that matter. So when you look at the long-term shortfall, as far as Bloomberg and EF, it estimates that the deficit could reach around 19 million tons by 2050 without massive new investments. So if they don't make a massive new investments, by 2050 it can expand to 19 million tons of deficit. Now let's talk about the supply wall. Why we can't mine our way quickly? Many times a client will ask that, okay, why not we have more ores, copper ores, and we start mining? So there are a couple of things you need to know. First and foremost, it is a declining ore grades. Ore grades have fallen from 1 to 2% historically to below 0.7% today, which means you need to require exponentially more rock and energy per ton of copper produced. Secondly, rising capital cost. Now the costs to build a new capacity have doubled to $15,000 to $20,000, therefore making new mines increasingly uneconomical. Third, long development times. Now the average time of discovery of production is now 17 years and can be up to 25 years. These are as per United Nations numbers, meaning new supply cannot respond quickly to the price signal. So therefore there is a long development time, 7 to 25 years from the discovery to production. So therefore if the demand surge is high, it is not possible to build up the supply for that. So now the fourth is permitting and ESG hurdles, that is environmental, social, and all those things. Now the environmental opposition and the complex permitting processes, they add an average of 3 to 5 years to the project timelines globally. What are 4 unstoppable vectors of copper demand? Electrical vehicles. An average electrical vehicle requires 70 to 90 kg of copper, which is nearly 4 times more than 20 to 25 kg of copper used in internal combustion engine, that means petrol and diesel engines. Now 60 million plus units are annually produced by 2030, which creates millions of tons of new demand. Second is the green grid. Now the clean energy share of copper demand will rise from 25% to around 61% by 2040. Now the grids have to be upgraded. They will require 427 million metric tons of copper by 2050. Now these are Bloomberg numbers for that matter. Third is your AI and data centers. When you look at AI and data center, the newest demand shock, as JP Morgan says, is estimated 475 kilometric tons of copper demand and the data centers in 2026 alone. Now, the S&P notes that this vector wasn't even on the radar 3 years ago. So you can just see how faster the demand happens, and therefore the supply has to be there attuned to it in order that the shortfall doesn't happen. So industrialization and defense. Now the rapid industrialization in India and Southeast Asia will add around 3.3 million tons of annual demand by 2035. Now the modern defense systems and the hardened infrastructure are actually very much copper intensive for that. Now we are looking at the nuclear energy thesis. This was on December 20, 2025. The India fundamentally reshaped the nuclear energy policy for the first time since 1962. So what does the Shanti bill brings onto the table? What are the key reforms? First and foremost, private sector entry. For the first time, private companies can build, own and operate and also decommission nuclear power plants which end a 60-year state monopoly. Second, FDI. It permits up to 49% of FDI in nuclear power projects, attracting global capital and expertise. Third, liability framework reforms. It removes the critical supplier liability barrier. This was the main deterrent and introduces a graded liability caps of up to 30 billion rupees. SMR framework. It creates a legal pathway. It creates a legal pathway for SMR, small modular reactors, targeting 5 indigenously designed units by 2033 to enable faster and decentralized deployment. Now, it is not necessary to make the big nuclear plants. Now, you can also have a small and modular reactors. Question arises, what is the scale of ambition? We are looking at the 12-fold expansion by 2047. When you look at gigawatt capacity, we are looking at around 8.2 gigawatt, which is currently at 2025 ending. And we are looking at 100 gigawatt by 2047. How much of also the ROI you will be making when you work in this space for that matter? They are looking at the capital investments of around 15 lakh crore, which is the total investment opportunity which is unlocked for public and private sectors. The base load power of around 3% nuclear is currently available. So transitioning from the marginal supplier to a significant provider of clean, reliable base load power, there is a huge opportunity. So if you ask me, there is around 97% of the opportunity in the power space for nuclear power. So now the question arises why the nuclear is non-negotiable for the modern economy. First, the AI power challenge. The AI power challenge, AI data centers, if we see, they require 24/7 reliable power that intermittent renewables cannot provide. India's data centers capacity must grow from 1.2 gigawatts to above 5 gigawatts by 2030. What is a global precedent? The global precedent is tech giants, for example, Microsoft, Google. So they are also securing the nuclear capacity. They are having their power plants for that matter. So Microsoft is in the 3 Mile Island, Google, Carios SMR, that is a small and medium reactor. Amazon has the multiple nuclear investments for that matter. So even the corporates are all getting into this. So it is called as a global precedent. Then you look at the net zero imperative. Now, with 75% of India's power still from the fossil fuels, nuclear is essential for decarbonizing the baseload generation because India has taken a target of net zero by 2070. Therefore, the global goal is to triple the nuclear capacity by 2050. So we talk about the SMR revolution. The small and modular reactor, that is 30 to 300 megawatt E, offer the faster factory-built deployment. India targets 5 indigenous SMRs by 2033 with key players like NTPC and BHEL leading the charge. Investment options, how you would position for the twin pillars. So when we look at the copper playbook for that matter, there are two parts, Indian equities and the global exposure. When you look at Indian equities, you have Hindustan Copper, you have Hindalco and Vedanta. Hindustan Copper is India's only integrated producer, which is planning to triple its capacity. Hindalco is a diversified play with a world-class copper smelter. Vedanta is aggressive expansion plans and a high yield optionality. When within in copper space, you're looking at the global exposure via LRS, that is a liberalized remittance scheme. You're looking at the global X copper miners, COPEX, US Copper Index for that matter. Producers are Freeport, McMoran, Southern Copper, SCCO and BHP Group. Now, when you look at the nuclear playbook for that matter, Indian beneficiaries are NTPC, BHEL, L&T and KSB, Kirloskar Brothers and Thermax. Now, NTPC is spearheading the SMR deployment, that is small and medium reactors via subsidiary NPUNL. BHEL, it is an only Indian firm with proven nuclear steam turbine. No other has a steam turbine as of now, nuclear steam turbine. Critical EPC expertise for the nuclear infrastructure, and then we are looking at key suppliers to the nuclear value chain. Now the question is, how and what about the global SMR exposure? SMR pure plays are NuScale Power, Oklo, Uranium, 𝐘𝐚𝐿, BWX Technology. So those of all those investors who have an exposure and access to the global platforms can still go and use these opportunities, targeted obviously for the longer period. Now what we are looking at the strategic allocation and risk management. Now every investor is different. So if there are 100 investors, there will be 100 permutations and combinations for their structured portfolio. Technically, when we are talking about any theme or any sector, then as a part of total portfolio, only 10% should be allocated there. And within 10%, how the internal structure should be within 10% has been articulated here. This is only for representation purpose. Now here we are looking at copper, primarily Indian. So 25 to 30% within that 10% of allocation. Hindustan Copper and Hindalco. When you look at the copper and global, you're looking at 15 to 20% of the allocation. COPEX, ETF, FCX. You're looking at nuclear Indian, you're looking at 25 to 30%. It is NTPC, BHEL, L&T and KSB. Nuclear global SMR, it is 15 to 20%. SMR, Oklo and CCJ. You're looking at cash and tactical, 55 to 10% of the cash for opportunistic additions that could be there. When you're looking at risk and mitigating that risk, the first risk that comes into the play is purely the commodity price valuation volatility. That is then how can you mitigate that? Diversify across miners, diversify across ETFs and downstream companies. Maintain 3 to 5 year horizon. If you ask me, it has to be 5 to 7 year plus horizon for that matter within this space. So second, you are looking at execution risk, which is a nuclear focus on established players with proven track records like NTPC, BHEL and L&T. When you look at regulatory risk, it is a reforms are enacted. Copper is a critical mineral. Policy direction is clear. Then supply chain concentration, diversify across geographies. We have global ETFs to mitigate the China's refining dominance. This is actually one of the generational opportunities that have actually come up in the building blocks of the future. So copper and nuclear energy are the two sides of the same coin, the total electrification of the global economy. Now, the copper thesis is actually built on immutable supply demand reality because the supply is very less as compared to demand. The nuclear thesis is built on the powerful policy inflection point in India because we have to shift to nuclear energy because we are 70% dependent on fossils, and by 2070 we have to be net zero. So therefore, when we look at reasons, we are looking at structural demand growth. It is backed by mega trends like EV, AI, and decarbonization. So then you look at the powerful policy tailwinds. There's a strong government support in India and globally. Looking at inelasticity supply, that is creating a sustained pricing power for well-positioned companies. So now the time to position in this is now before the market really prices it. Otherwise, it will have been the same thing. The gold and the silver have gone up, and now you are kind of thinking about getting into the gold and the silver for that matter. Whatever has been said here is a part of illustration of how you should, as an investor, approach nuclear and copper as an investment asset class. And obviously it is for the sophisticated investor. If you are beating a sweat at a wink of the volatility in the prices or the swing in the prices, then it is recommended not to go for these products for that matter. So therefore, you need to connect with your banker, analyst, agent before you can make a call and take your positions in the portfolio. Thank you so much. This is Rajat Dhar signing off.